The first guy up, so I'm going to ask you guys to go back. It's kind of like the dating game. Remember, we're going to bring you guys up. Contestant 1. There we go. Doug, you're going to go in the back. And we're trying something out new, and I'm going to put everybody on the fire. We're not going to let any meandering. It's going to be like bullish, bearish, yes, no, buying, selling, hold. Brent Cook, where are you? Please come up. There he is. Look at that strut. Okay, so Brent, you come from a geologist person. Yeah, for 7, we're doing this, you can set up the clock, well, it's okay, I'll do it for 7 minutes. So everyone's gonna go through this for 7 minutes. Brent, you're an explorationist, you look at these things, and we both joke about how few of these, 1 in 3,000 anomalies ever becomes a mine, and even these exploration projects that are getting so much money. So let's just kick into some of the exciting stories on the market. And are you bullish? Are you buying? And do you see that being a mine, or do you see it being taken out? Let's start with GTT Gold.
GTT Gold. We bought that in Joe and mine's newsletter probably about 3 or 4 weeks ago when they announced a drill hole that looks like they're into a high-grade copper-gold porphyry. We've gone through it in detail, so I'm very positive on that one.
Even at the current market cap?
You know, its market cap's about 150 million Canadian. You compare it with the
3 other producing porphyries in the province that are producing and its bigger market cap.
But they're not making money. This is high grade. You look at SolGold down in Ecuador. They've got combined over $1 billion market cap. They've got something that might be similar to this, but it's in a better location. The infrastructure is better. I think we can ramp into it rather than shaft, which really cuts down the numbers. I mean, this is early stage. They've got more drill holes coming out. So
do you see it being taken out?
If it continues to show what they've got, yeah, I do. I see a strategic coming in and a buyout down the road, okay, if they're successful, and that's the bet.
Novo. I know you were bullish, you sold, but what about now that it's pulled back by 50%? And it's your buddy who runs it.
Yeah, Quentin's one of the best explorationists in the business. And I give him credit for finding what I think is going to be a district with tens, if not hundreds of millions of ounces. That being said, it's not working out. I have a hard time seeing how this is economic on a large scale, and I don't see this working out on a large scale. So it's not something I'm buying. We made good money on it, but we're gone, and I'm not coming back.
What about the most recent success in the Red Lake District, Great Bear?
Great Bear looks interesting. I don't own it. I feel like I kind of missed it because we looked at the data in detail, and it appeared to be too disconnected, and continuity is a problem. But subsequent to that, we've learned that they've got the right rock type, the right structure, and they've got the whole trend that looks pretty interesting. So I like it. I don't own it, but I certainly don't see any reason to sell it.
Let me go back to BC again. I got a tweet. I don't know if it's fake news because there's been a lot of people making fake reports out here that I was financing a company. I heard Brent Cook financing Garibaldi. Is that true?
Garibaldi.
I got to have fun with you a little bit.
Garibaldi. That's an interesting one. I mean, conceptually, it's an interesting concept. My view is that the geologic setting is not right for a large nickel sulfide deposit. They've got an expert PhD that knows these things better than he thinks it is. But what's been frustrating about them, and this is what I think you really got to look at, is their disclosure has been shit. They're not telling us anything, and when they do, it's kind of like you know, that dog, you know, the squirrel. And that's what they're trying to do to the shareholders, in my opinion. Results have not come out yet on what they started off drilling, the deep targets, and they've sort of gone off and found a little showing that came out from under a glacier, drilled it 27 meters down and hit 1.7 meters of massive sulfide. So I don't think it's real. I don't think it's it's nothing I would own.
What about Serengeti?
Serengeti, that was a fantastic hole down the guts of a known resource. It's a small deposit. I'm not owning it.
What about on the other side of the ridge, Sun Metals, with Peter McGaw and the Marco Day and Steve and those guys?
All right, so they're chasing a carbonate replacement deposit. And these things are really complex. They wind and wiggle all over the place. This hit they just had is it's at least 500 meters down, and they're getting close, right? But I compare it with Mag Silver's Cinco de Mayo deposit, which
also is Peter McGaugh.
And Peter knows these things. I mean, he did his PhD on these things. So I'm not, he's smarter than me. But what I see is a company that's going to be chasing this thing deeper and further, and they're complex. You're drilling 500, 600,000 meter holes. And I think Mag Silver's put, if I'm not wrong, 60 million into Cinco de Mayo, same type of system, and are still getting close, and they're just fortunate enough that the locals threw them off.
What do you think of White Gold's results? White Gold?
I'm pissing off everybody here.
White Gold?
White Gold. That looks pretty interesting. I don't own it, but it looks interesting. Great group of people. That looks interesting.
And they're cashed up heavily for
No, that one looks pretty good.
Brent and I were big shareholders in the past, did really well on it. I'm back in it, so open disclosure. Brent, let's go rapid fire commodities. Gold over the next 12 months, lower or higher?
Higher.
How much higher? Well, your buddy there wants to know these specific details, so he can tweet about it.
I really don't know. Okay. I think,
but you believe higher than where we are.
I think we bottom, we bounced along bottom, and everything I see out in the world tells me it's going to get worse.
Okay, the world's going to get worse.
Yeah.
Okay, so gold should go higher. Silver should follow that pattern.
Probably.
But then, by that theory, copper should go lower.
I don't know. I'm neutral on copper, but I'm real positive on copper discoveries because we need new copper, and you know that. Need new economic copper deposits.
What is your biggest holding in your portfolio right now?
It's either Evrim Resources or Mirasol Resources. Evrim's drilling a project in Mexico right now. I talked about it in my presentation. If they hit, great. If they don't, I lose half. And Mirasol has got a number of things going that could work out really well.
Now, one that we saw, I think you were a shareholder. It was a big win for me with Nevsun, with the Serbian assets. There was one that at the same time, they were there before Miles with Timok and with Reservoir. Davey Cole with his deal. I tried to finance them, but their biggest shareholder, Paul Stevenson, wouldn't have anything to do with the warrants. But what do you see moving forward with their deal with the Russians? Do you think they're going to get the full capital in?
Oh, your EMX royalties?
Yes.
Yeah, I think it's basically a done deal. The money
will actually close any day now?
I think so, yeah.
And then
that's my opinion.
When you look at that, a cashed up prospect generator with royalties, what do you see in their future? Because that's very bullish.
They're a smart group. They've got some of the best exploration teams scattered around the world. Dave's done a great job of doing what is set out to do.
Done a fantastic job.
So I think that looks pretty good. And I think they're going to continue to generate real good ideas all over the world. 3
commodities you want people to stay away from, or you're staying away from?
Cobalt, vanadium, and probably... I don't own any uranium. I see a long dead period before uranium picks up, but I know that's not a popular thought here, but that's my view.
Cool. Ladies and gentlemen, Brent Cook, thank you very much. Brent Johnson, Santiago Capital. Contestant number 2, please come up. Brent, stop talking about your milkshake in the back.
I thought Grant was messing with me. Am I sitting or standing?
So sit down in the middle. So according to your theory, you believe we're going to be bullish, or what you're calling a melt up in U.S. equities. And that's going against what everyone, like you watch any of the smart guys on TV. So where do you see the FANGs, the Facebook, the Amazon, the Netflix, the Google, or Alphabet?
Sorry. Did this work? Yeah. So I do think, they've come off a little bit in the last month or whatever it is. I do think they'll recover and they'll go higher. I don't think that they will continue to have as big a premium over the rest of the market as they have over the last couple of years, mainly because I think a lot of people don't realize this, but growth stocks and tech stocks in particular have a certain interest rate bet hidden inside of them. And as interest rates rise, which I think they will continue to rise, I think that premium that they have experienced over the last couple of years due to low rates will maybe come down a little bit. So I think they'll come back, but I think they're not the only ones that will come back.
So too big to fail because the liquidity in the generalist funds will stay in those stocks because they get paid to manage money. You can't stay in T-bills and get paid. Is that essentially your theory?
Yeah, and then also I think that because there's such a high demand for dollars, people will continue to buy treasuries, but I think they will demand a higher level of interest rate to do so. And so I think I don't think U.S. bonds are going to crash, but I think they're going to fall. And because nobody's lost money in bonds for 40 years, if they actually lose money over a 12-month period or 18-month period, they might actually start to sell some of those bonds. And I think that money will flow into U.S. stocks. I don't think it's going to be flowing overseas.
So what sector would be your biggest short?
In the U.S. or in the world?
Well, the world's too vague.
Yeah, okay.
Most of these people are North American focused. So let's say a U.S. sector.
I guess I probably would say technology just because I think the valuations are so high. I don't really want to short anywhere in the U.S. right now. I really don't.
So you're not shorting at all?
No, not in the U.S.
So where would you short if you can go anywhere in the world?
I'd short the hell out of Australia. Sorry. No, honestly, I think...
So then a short on Australia is a short on commodities.
That's right. That's right. And mainly because it's a twofold problem. Is Australia has a huge banking problem. They haven't had a recession in 30 years, and they're very much exposed to China. And when China hits a hard landing, it's going to double the effect that they're already they're going to have a hard time with their banking system and their real estate market, even if China doesn't hit a hard landing. But I think that's just the cherry on top of it. This will sound crazy. I think the Australian dollar is going to go below 40.
Whoa.
Wow. That's the most it's been in 30, 40 years.
Yeah, I think it's at 70 now.
It's 71 now.
Okay. I'm sorry.
But the Australian dollar and the Canadian dollar, so would you say the same about Canada?
Yeah, but I think Canada doesn't have, Canada has a real estate problem too, but I don't know that they're...
Cannabis is legal now, so...
Yeah, so you got cannabis to save you, right? Again, I know these sound sensational. I don't want to come across as a sensationalist because I kind of don't like sensationalists.
Well, with a jacket like that, I think you are.
Well, I was wondering how long that was going to take.
Now, 35% of your net worth is in physical gold, and to me that is a very, very high amount. Like, I'm not anywhere near that, but I'm a very large investor in the equities. What about the equities exposed to gold? What percentage? Did you include that in your 35, or no, that's just physical gold?
I don't own any precious metals equities right now.
Oh, God, these companies are going to love me that I'm bringing up a guy on stage.
No, I have in the past, and I'm absolutely sure I will again in the future. I just don't right now.
And are you more of looking at producers and,
I would probably, if I went back in, I would probably just buy the royalty names initially because I won't go back in until I think that gold is for surely the bottom and we're rising, and then I just want leverage to the
And which one is your favorite?
God, that's a good question. I would probably go in and buy the silver royalties, to be honest. First Majestic or something like that, or one of the...
Well, Keith's company's more of a producer on...
That's true, that's true. Silver Wheaton, or I guess it's Wheaton now. It's not even
Wheaton Precious Metals
Wheaton
now.
Precious Metals.
But they've also done a cobalt royalty.
Yeah. I would just go in and buy the big guys, to be honest. By that time, I'd probably buy Gold Corp.
After the 20% quarter drop?
Yeah, sure. I'm just not buying them yet. I believe in them. If I was going to buy one name, I would probably buy Ivanhoe, which is probably not a surprise to a lot of people, just because it's got great projects, it's got a great leader, and I think
tough place though.
It's very tough, but by then everything will be so bad it won't be any worse than anywhere else.
Okay, and on that note, I want to thank you very much for doing the Krossfire. Up next is David Morgan from the Morgan Report. David Morgan. There he goes. Sit down, yeah. Make yourself comfortable. This is the only guy in our industry who not only has a face for television, but a voice for radio. So, David, I've known you for a long, long time. Wow. Here, a little known secret, I was about to join forces with David Morgan, and then Doug Casey ruined our plans to take over the world.
Add on to that.
Now, silver, that's been your bread and butter for 25, 30 years, essentially. Where do you see silver over the next 12 months? Let's start there.
Modestly higher.
Can you guys hear him? No. Is it on? There you go.
Modestly higher.
Really? And when you say modestly higher,
Well, for silver, that's a pretty big bandwidth, as you're implying. I don't think I'd see silver in the next year above 20. It's hard to say. I mean, I always have to give the caveat that, you know, with the world as it is and the economic structure as it exists, there's always that, you know, one-off event or an anomaly of some type, and that could set the metals on fire. What I do believe is whenever it happens, the degradation in the stock market coupled with the bond market, because they're highly correlated now, will push into the metals because there's really no other alternative, and the gold market is so small relative to what the other markets are that it doesn't take much new buying to drive the market substantially higher.
so within the next 12 months, can you see silver touch $12, $11?
I don't see it, but I'll look you in the eye and say I've been wrong before, and I'm not afraid to admit it. Usually when you're under the cost of production, you don't see it go much below that for very long. I mean, there's a great way to corner the silver market, but the CEOs of most of these major producers won't hire me at $50,000 an hour to tell them how to do it. But I'm being a bit facetious. Actually, all you have to do if you're in the business is to sell a put. When you sell a put, what you're doing is you're forcing the producer to sell you the metal at a given strike price, and you're catching a premium to do it. So if you're a producer that produces all-in sustaining costs at, let's say, $15 silver, and you sell puts for a half year's production at 15 and say you capture $1, you're actually buying silver at 14 bucks less than it costs you to produce it. And that's a strategy that should be employed by most of the hedgers.
But is the market liquid enough to do that?
Not that so much size, but close to it, believe it or not.
Really?
There's so much paper versus the commodity silver of any other commodity. It's fascinating because if you look at oil, if you look at gold, if you look at wheat, if you look at any other commodity, there's not that 6-to-1 to 7-to-1 paper cover that there is in the silver market. It's the most highly traded market relative to the physical quantity that exists.
So I want your opinion on, to get some free consulting from you. I love free. Jay and I, when we put this conference on, we believe fundamentally that we need more of my generation in this sector. And you look at the crowd, and that's something that we've been emphasizing. So now, as someone who's gone through the ringer for almost 40 years in the sector, you've seen the highs, you've seen the lows, you've been through them, you've earned the scars. If you were starting out in the sector, and let's say you had $100,000, what would be the first few things you would do to take advantage of what you know, but yet you're new to the sector?
Nothing like putting me on the spot. You know I'm a deep thinker and I'm not that great off the cuff, but off the cuff, I would try to resonate, and I mean resonate, with the millennials. And I'm actually going to try that at my ripe old age. I'm going to try to produce the Morgan Millennial Minute, try to make it 2 minutes that's very pithy, that puts them in the spot to think about money, savings, and their future. Of course, I'm going to bring...
But I meant on a buying. Like, what would you start buying? Would you be taking big risks? Would you be taking producers? Where would you start? What sector? What commodity?
Well, having learned from the, you know, Jimmy Dine's experience and, you know, making more money in, you know, a month doing futures when I was 27, you know, I was making more money per day than I was making per month at my job. So I got kind of the worst thing that can happen to you. It's worse than drugs almost. I mean, when you make that much money that quickly and you're that young, you get the idea you're invincible. So I would definitely teach people not to do that. And I would teach them about value investing in the sector, which is basically what I still do. So for educational purposes, we all love that high risk, high reward situation. But if you do it luckily the first time, it's really hard to repeat. If I could just add on to that, I met one geologist from Australia, and he was very young, about 23 like you when you met me. And he just, right place at the right time, and he got rewarded in stock because the company had no money, and they hit big. So at 20-something and 40 years ago, he was up, I don't know, $3 million. He was very smart with what he did, though. He bought a beach house in Australia, paid for cash that he still owns. So kudos to him. But he said, I've lived my whole life to today trying to redo it, and I never have.
Wow. Interesting. Now, what percentage of silver, physical silver, is your net worth?
Oh, God. I'll take the fifth.
You're not allowed to take the fifth with the K, man. Our relationship's too good for
talking
that.
physical or
Physical.
stocks?
We'll get into stocks, but just physical. Let's say physical both.
At about 50%.
Did you say 15 or 50?
50.
Wow, you're seriously a silver bug.
Absolutely.
And what about gold, physical gold and silver?
At 65%.
And if you,
This happened, and let me explain. I mean, not that I don't really care to share my personal stuff, but I will. So I was divorced when silver was $42 an ounce.
she took the physical assets and you took the
She
paper
got up-
assets?
When the truck drove out of the driveway, it was really low to the ground.
I love it. David, you've been an absolute, I want to give you kudos. When I was a young kid with all this data and spreadsheets, you actually took the time out early on, and I appreciate that. I've never forgotten that. That's why you're always in the PPs and all that. So I've enjoyed you, and thank you for check out David's stuff. David, thanks so much. All right, now it's Doug Casey. I hear, Doug, you're up. Hurry up. Do you guys like this format, the Krossfire? It doesn't feel like the dating game? And then we're all going to vote who you want to go home with. Oh, God.
It's in San Francisco, so you can pick either a male or a female.
All right, Doug, I want to jump into things with you. You've been there and done that. You've invested with guys like Lucas Lundin, even his father, Adolf Lundin. You were there with Rick Rule when he had hair. You were there when Rick was a manager of a nightclub in Vancouver. You've seen the whole industry. What would you do today differently than what you've done in the past 40 years? If you were to redo it, if you had a redo.
I'd be a better seller. I've always understood theoretically that almost everything that's traded in Vancouver is a burning match. But I should have been much more rigorous about putting the theory into practice.
And when I say Doug is bad, he is really bad at that.
Well, I don't remember. I mean, that's the other mistake I've made. Way too many stocks, so many I can't remember their names or why I bought them. It's deadly in this business. So those are the two big mistakes I've made, and they're related.
Was it part of the fact that you got to be in the concrete jungle? And I'll share a little story. When we had that first fund, when I took it over, before I took it over, it had 138 names in it. And it was a small fund. And
That wasn't my fault, though. I mean, really, that wasn't.
But was it because you got to be in the jungle every day and manage your portfolio and spend the time and just say, would you say have a new rule, 10 stocks only, or what would you redo?
You shouldn't have more stocks than you can remember without looking at a piece of paper. I think that's actually a good general rule.
So do you follow that rule today?
I'm trying to. Yeah, I'm getting much better at it actually.
Now, the market's so cheap that we created a fund trying to finance the next generation of superstars, the Amir Nani, the Ivan Bebics, the Pat DeCapos of the world. But today you can buy a Ross Speedy at the price of a unproven industry veteran that he is, and he's backstopping his own deals. How long do you see this staying like this in this bear market?
Well, about the only area of the market that I feel good about at this point, it's not, I mean, you can make a good argument for cryptos. Okay, a separate case. I think it's the pot bubble is about to burst. The only place that I'm really interested is resource stocks. But 95% of the so-called resource stocks are just utter garbage. They're stock promotions.
But what has to change? If you had a newspaper and all these things happen globally, but it was 5 years ago and you had a time machine, you would guess gold would be $2,000 today.
I would have guessed
What
that,
actually
right.
has to happen to get gold to 1900?
I think there's got to be some type of a panic event that scares people and wakes them up to get into the only financial asset that's not simultaneously somebody else's
So would you
liability.
see something like a revolution in China, an assassination of a major leader? What needs to happen to trigger off this risk-off market and flee people to the oldest currency on the planet?
Well, everybody's forgotten what happened in Cyprus about 2 years ago. And that's right. And all of the major Western banks, the laws now is that something serious goes wrong. Don't expect the government to bail out the banks like they did in 2007 and 8. It'll be a bail-in, where if you have uninsured deposits, that's just going to be tough luck.
What about a debt jubilee? Why couldn't the government do that to all the people, the millennials who have huge student debt? Do you see a debt jubilee?
That's very likely. I mean, and the millennials will, you know, the most stupid thing that millennials and their parents have done is going to college, where they've been utterly corrupted. I mean, the university system in North America is run totally by Marxists and SJWs, horrible people. And you send an 18-year-old kid off to listen to people in authority, and they're saying things that are worse than crap. I mean, they're actively destructive. And if they ever get it out of their minds, it takes years. So my prognosis from that point of view, since everybody goes to college, you're supposed to go to college, which is a ridiculous concept to start with, it's very, very bad. It's not going to be turned around.
But where are we going to learn about political science and history from then?
Exactly. Exactly.
I have a little surprise.
Those are things that's recreational reading. I do a lot of recreational reading. But look, if you're going to go to, if you got a kid or a grandkid, don't send them to college. If they go to college, it should be only to take science, technology, engineering, or math.
Well, interestingly enough, I have a surprise coming after the Krossfire for everyone, just to show my little hobbies and new sectors. And this is what mining did 60, 70 years ago, because I got to know guys like Jimmy and Jim O'Rourke and Roman Schlanka, who are part of these huge companies. They didn't necessarily take people from the university degrees. They would train people within the company, within their own labs, and they had their own, training program. If you look at the emerging other sectors in the technology, for example, the gaming sector, they don't go to Harvard to learn gaming. The companies have their own gaming institutes where they create their software, and then the best go downstairs and work in the industry. The rest go and do other things, or you get better chops. So that's where the industry is starting to go.
Absolutely. And the other piece of advice I'd like to give to everybody is do not, under any circumstances, give money to a college, university, or alma mater. You're just buying the rope that it's going to be used to hang you.
But that's your take on charity in general.
Also, yes. The people that run these professional charities are the worst kind of people possible. All these NGOs. No, don't.
So I'll share a great story. So a mutual friend of ours named Frank Justra is making us vegan pizzas at his house, and because of Doug, we show up late. So Frank's all mad at me because he thinks it's my fault. Anyways, we get into the whole charity factor, and he's one of your closest friends, and Doug's anti-charities, and Frank Justra is partners with Bill Clinton on the Clinton-Justra initiative back then. And that's a really interesting. If I could film that, that would get me 1 million hits on just the debate between someone who's invested hundreds of millions in a charity and someone who's anti-charity.
Well, I've got to say Frank is a very smart guy, and he didn't give $100 million to the Clinton Foundation because he's that charitable, if you know what I mean.
Well, Frank's a great guy. He's got a big heart.
No, he is.
He got nothing out of it.
He's a super guy, and we like to talk about philosophical
He makes one
issues.
damn good pizza, and that olive oil is really good.
Fantastic. Frankie's olive oil. It's a hobby for him.
And on that note, our next guest is Frank Curzio. Doug Casey was contestant number 4. Frank Curzio. Ladies and gentlemen, the second best newsletter writer in the industry. So, Frank, you believe the U.S. markets are going higher?
Yes.
Can the U.S. markets go higher and gold go higher, the gold spot price?
Yes, I think so. So what I see is higher interest rates, and I think that's going to take a lot of leverage out of the market, which it's doing right now, which you're seeing with the FANG stocks. And when you're seeing money shift around, because hedge fund managers and money managers, they get paid by putting money to work, right? Not sitting in cash. So it's basically reallocation, money flows. And right now they're looking for sectors getting out of technology, and gold based on fundamentals is very attractive right now.
Now, what about the gold equities?
I like gold equities more than I like the gold price. I just think they're incredibly undervalued right now. I mean, where's gold gone over the past few years? It stayed the same, but the equities are down. I mean, you guys could tell me, right? All of us own gold equities, so we're all getting crushed. But I think it's a really good opportunity to buy the smart people, the ones with good deposits, and I mean, there's a lot of them out there, actually. There's a lot of good names out there that I think are very attractive. Even the large names, like Goldcorp you mentioned earlier, right? They bombed the quarter. I don't know if you saw Newmont Mining, but Newmont Mining from 2013 to today, I mean, the amount of leverage that has come out of that company, which was like, not to get technical, it was like 4 times EV to EBITDA. Now it's like 0.8. And they're raising their dividend. They have a great balance sheet.
Great projects.
They produce for under $1,000. And they have their pick of the litter for anything out there. So even the majors definitely have exposure. I mean, you could buy the majors at very cheap prices now, and also have a little exposure to some of the juniors, because you can see.
Well, there's a bit of a phenomena here going. I call it the Commonwealth takeover, where the Australians are trading at such a premium to the North Americans. Why is that?
I think it's because it's a lot easier to short the U.S. markets. Who's going to answer that? I think it's easy to short in the U.S. markets. It's very easy. And if you look at the leverage that's in these companies, like First Majestic Silver, I think is fantastic, reporting great numbers. There's a 20% short position on that. I mean, if anything changes within the global markets, if we do a deal with China, if the Fed just stops raising rates and just a little bit of the language, we could see a lot of these companies, I think, go higher, believe it or not. And I think it's a good opportunity.
So I wanted your take on Caterpillar, which is everyone see the big yellow trucks. They had a record Q3 and they sold off 10%. Mm-hmm. Is that a signal, an alarm that you should be paying attention to, that their guidance is negative, or what's going on there?
For those of you who run your own company, right now, earnings are growing at 20% right now. Companies are trading around 15 times earnings. To put that in perspective, the 10-year average is about 16.2. That's how cheap we are in the U.S. markets. I mean, people want to say it's going to crash, but it's a great environment. But if you're a CEO of a company, what do you have to look forward when you offer guidance? Currency, China, which impacts Caterpillar. There's just so many influences out there right now that's going on where it's hard to give guidance, so they're being conservative right now. But I did a screen of stocks, and there's 20% of the S&P 500 is trading below 12 times earnings and growing those earnings by more than 20%. And you also have 6 companies, so what is it? Whatever it is, 20% of the Dow, a little bit more than that. Caterpillar included, JP Morgan, there's like 6 or 7 stocks in there, same thing, below 12 times earnings, growing those earnings by more than 20% and pay more than a 3% yield. That's pretty attractive.
So let's get into the nitty-gritty details. I had, Brent, and I was surprised that 35% of his net worth is in physical gold. How much physical gold do you have, other than your big chains that you wear in Florida when you go to those football games?
Big gold, yeah. I used to listen to rap back in the day too, so yeah. But not too much. I mean, I have a big uranium position. I own gold equities. Like I said, it's not so much where I think gold prices are going to go higher. There's a big disconnect between where gold prices are and where the equities have gone.
So what are your 3 biggest holdings?
My 3 biggest holdings, let me see. Zarga is one of them, uranium. What else do I own? Revival Gold is another, and Nevada Exploration, just, in the gold markets. Those are my 3 biggest holdings.
Okay, and what about, you said you like uranium. What are your big uranium bet?
I mean, I like the U.S. uranium. I mean, you saw UEC pull back tremendously after the financing, so I think it's very oversold. I like Zarga a little bit better. GoviX, I think you have to hold management accountable. They said that they're going to have production in 2020. If they don't, then sell the stock and go into something else. I mean, hold management accountable. If they're going to tell you, you're the individual investor, right? If these guys are going to tell you, hey, this is going to happen, and they don't do it, then sell the stock and go into a different management team. You have your pick of the litter right now. There's a lot of cheap stocks out there.
What are you staying away from?
Staying away from. I think the FANG stocks are overvalued. Facebook's going to report. It'd be interesting if you can quote me on this, but Facebook, I think, is going to bomb the quarter because they changed their structure of how they do ads. And they missed the quarter really bad last time. It was a bad quarter. And out of 43 analysts that cover the stock, they got 2 downgrades, even though the stock crashed. Now, their biggest revenue generator is from political ads, and they no longer do political ads. So it's going to be interesting to see what their quarter is. I wouldn't be surprised if they miss by a lot, but you're going to see more regulation come in with these companies because they have data on every one of us. They know that we're all here right now. They know what you ate for breakfast. You have no idea what the algorithms. It's incredible, the amount of information that they have.
And now if you see the Alphabet share price, its long-term trend break, is that a telltale signal for you that, uh-oh, you might be wrong and the melt-up is melting down?
For me, not necessarily, because I think technology has significantly outperformed. I mean, we bought Facebook under 1,000. It was going up about 15% a month for a year. Some of these stocks are up tremendously. You're going to see more rotation. I think home builders are a great buy. I mean, I think that the home building sector is very strong right now, even though at 52-week lows, because it's a lot different from uranium because they have a demand problem. They can't produce enough houses in the U.S. market right now. So when you're looking at uranium, well, it's more of, they're cutting production. They just cut production. So it's a lot different. But I think home builders are great, and you're going to see a lot of rotation to that. And you should buy a U.S. bank. I mean, you have no idea how strong these companies are. Listen, I hate them. Okay, I know everybody. It's a gold conference. I hate the guy. What they did, and all those guys should have went to jail. My job, I don't get paid by companies. I'm an independent manager, so a newsletter writer. So my job is to make you money. I mean, the bank stocks are the strongest they've ever been. They have enough capital to withstand an unemployment rate of 10%. A market crash of 60%, GDP of minus 5%. This is the stress tests that we're seeing that they've all passed with flying colors outside of Deutsche Bank. But very, very strong. And a company like Citigroup is going to...
But in all those models, how much do they have on a bank run that you take out your money?
Well, yeah.
See, that's the one thing that I don't like about those models. But ladies and gentlemen,
yeah.
That was the number 5th contestant of the dating game. Curzio Research. Up next, Grant Williams. Grant Williams, you have so many titles. Vulpes Investment Management, things that make me go, Sit down. And Real Vision, but we just created a thing in the back with me, you, and Doug. Now, I don't know if Raul, your partner, is going to like that, but very Real Vision. So, we talked about Brent having 35% of physical gold. I want to clarify. What percentage of your net worth, again, is in physical gold?
You weren't paying attention. It was me that said that.
No, Brent also said it. I just want to confirm that you're also 35%.
Yeah, 35, 40, something like that.
What about when it comes to liquidity for yourself?
Well, that's what the other 60 to 65 is for.
So let's talk about that. No, but you're not selling your real estate. You're not selling your... What other sectors are you in?
I'm almost completely out of the stock market because I think
So you're heavy cash?
Yeah, heavy.
Okay, so let's break up the cash. And what currencies are you holding?
Dollars, because even though I think Brent's point is correct, I think you need to own dollars. I've got some Singapore dollars. I still have stuff in Singapore I need Singapore dollars for. I'm in and out of the pound because I think it's had periods where it's massively undervalued. And that's about it.
So with what you've seen, you called the Brexit correctly, and now you see this kind of resurgence of protests against Brexit. Do you see Brexit actually closing?
Yeah, I think it'll close. I mean, the whole idea of having another vote is ridiculous. I mean, it's patently absurd. I mean, what do you do if it goes the other way? Best of 3?
Will there be another vote?
I think they would love to try and force another vote. But you do that, as I said, what is it, best of 3? I mean, how does that work if it goes the other way? The whole thing's ridiculous. The vote's been had, the decision was made. Now you've got to get out. But you and I were chatting about this earlier. I think what happens, Brexit's not the problem. The European Union breaking up might even happen before Brexit. With this Italy thing, Italy's been a problem on and off for the last 7 or 8 years. It's kind of flared up, and people have talked about how dangerous it is, and it's gone away. But this time it's back, and I think this time it's more dangerous because of what we talked about, because of the Trump effect, because of this this wave of anti-establishment politicians. The more anti-establishment they are, the stronger their base becomes. And so you've got guys in Italy now that are really anti-EU, and the EU is the most inflexible group of people in the world. I mean, they are true zealots that believe in this idea, and they're not going to back down.
So we're starting to see this resurgence, or this buildup of what I call the traditional nationalist narrative that we see happening in Italy. You saw it in the Balkans when the migration came through Syria, and they were just like, they shut the borders down.
Sure.
And you see what's going on, and you see the elections happening. Tomorrow's the Brazil. Is it tomorrow?
No,
Yeah, tomorrow.
today.
Oh, today.
Today, yeah.
Today's
He's leading 56% at the moment. Yeah.
Yeah, so you see that this is happening worldwide. So this Trump phenomenon is not just U.S. It's going everywhere. What happens to the euro then? Obviously, you and I are in the same point. Where
I think the euro has been doomed since the day it was. If you actually look back, Margaret Thatcher's last speech to Parliament, if you look at what she said about the euro and why she was absolutely intent on keeping Britain out of the euro, everything she said happened. Every single thing she said is exactly what happened to the euro. Monetary union without fiscal union doesn't work. It works in the good times, which is what they've had since 1999. They've had a tailwind. Now we've hit the bad times. You saw as soon as the problems started in 08, 09, 10, the strains started showing, and they've done everything they can to keep it together because it's an ideal. That's what it is, and so they'll fight to the very end to protect it. But ultimately, it doesn't work. The same way printing money doesn't work ultimately. The same way negative interest rates don't work ultimately. We don't know how long it takes, but the more strain you put upon it, and the more this nationalist sentiment rises, the sooner this thing falls apart.
So who's the benefactor when you got 29 currencies now flip away? Let's just say hypothetically it breaks. It'll break it slowly. But who's going to be the net benefactor of the euro collapse? Is it the US dollar? Is it gold?
It's a great question. I mean, the simple answer is we don't know. The dollar will definitely see a bid from that for sure. What you'll probably find are the likes of Italy. If they go back to the lira, they go back to their own currency and have control over their finances, it'll be a good place to be. Germany's going to really struggle. Germany's going to really struggle. And not just because of they're going to have the strongest currency in the world by far, and that's going to be a huge problem for them as an exporting nation, but also the amount of debt that's built up through the Target 2 system. The Germans are on the hook for a serious amount of money that's just going to vaporize.
So other than the fact that they have great food and great wine and great designs and cars and clothes, why would the lira be such a bid?
Well, look, because Italy has been down for so long. It's a fantastic place. If they have a massive need for infrastructure, as you saw with this collapsing bridge in Genoa recently, just like in the US, the infrastructure there is horrible. There are things they can do to spend money and put into it. Obviously, 78% of it will go into people's pockets, being Italy. But there's an awful lot of things they can do to stimulate that economy if they're freed from the shackles of the EU.
Would you agree with my thesis that Russia would be a major benefactor of the euro falling apart from their sphere of influence and infrastructure pipelines and the deals that they can do?
From a sphere of influence point of view, absolutely. I mean, Europe's on their doorstep. And, say what you like, but Putin knows how to do a deal. And if he goes to people who have actively moved away from Germany, they need someone strong in that place to anchor the thing, and Russia's the natural place to go.
Every 2 days you're in a different city. What scares you the most?
Jet lag. What scares me the most? I think what scares me the most is the disappearance of dialogue. Wherever you go, I spoke briefly about conflict in my piece this morning, and we as humans have lost the ability to disagree with people. There's no discussion now. It's left and right. It's man and woman. If you have an opinion that someone disagrees with, there's no let's sit down and talk about that. You disagree with me, therefore you're an idiot, or you're worse. And that is, that's how Doug talked about the collapse of civilization. That's how these things happen. You lose the ability to sit down and talk problems through and talk ideas through. And everywhere I look, that has gone. It's not disappearing. It's gone. I mean, just look at Twitter. I mean, there's no discourse. There's no reason to get into fights on Twitter, but it happens.
Just look in a lobby, a bus. You go to school.
Yeah.
Everybody's
sitting on their phone. Everyone's engaging. But they're engaging in their own echo chambers, and that's what these social media things do. They keep you in an echo chamber, and sure enough, you get reinforced ideas. So as soon as someone comes into your chamber from outside with a different idea, you throw them out, and that's the thing that I really worry about.
It's worldwide.
Yeah, it's worldwide. It's worldwide.
It's only getting worse too with the millennials.
It is. Unless we can find a way to disagree. And talk about why we disagree and see the other side of our point of views, we have to find a way back to that. And everything I see at the moment is pushing the two sides further apart.
Interesting. Well, I don't know how we're going to solve that problem. On a lighter note, thank you very much as number 6 contestant.
That was it? All right. Thank you very much. Thank you.
Grant Williams from Things That Make Me Go, If you want an entertaining read, Grant's always got some cool narrative tale. And this is the moment that all the ladies have been waiting for. Contestant number 7, Mr. Rick Rule.
Saving the best for almost last.
You know you're my favorite. So, Rick.
You know what comes after that. His favorite whipping boy.
Now, if you were starting out in this sector, and I asked this to David Morgan, and investing, not buying commodities, because someone starting out doesn't want to buy a bunch of gold and be like Doug Casey and storing it in Argentina and forgetting his password to his vault. How would you start about building your net worth today? Do you start with the ultra high risk?
I hope that I would choose to align myself with the very, very best people I possibly could. And I'd learn a lesson that took me 10 years to learn, which is not to worry about making money. I'd figure out a way to make myself absolutely indispensable to the best people in the business. And I mean, those are the two things I do. I'd work very hard to find the best people in the business, and I'd find what I could do for them that they couldn't do for themselves. And that's what I do. And I'd love the chance to do that, Marin. Sadly, Father Time is taking away what Mother Nature gave.
Well, interestingly enough, let's expand that. We see that so many of these industry leaders that we saw in the last cycle have passed on and moved on. Your mentors like Ned Goodman, an industry titan who taught you so much. And we created a fund together to invest in the next generation of superstars. But now it's kind of difficult when we talked about it going, the existing superstars are so cheap. Why do I need to take a risk with a unproven superstar when the superstars are cheap, like Ross Beatty, what we did with Altera? So
that's a great point, Marin. I think I was wrong when I asked you to find the second generation superstars. That was useful to me, but maybe less useful to you. The market gave you the opportunity where you didn't have to find the next generation, where you could go to the old dinosaurs like me, and surprisingly, despite the billions of dollars that they made for investors, they were free. And I think you made a great decision. I would hope at your age, I'm being honest, I would hope at your age that I would have had the wisdom to recognize that as you did.
So let's move forward with names. We're not going to give stock ticker symbols, and I believe Rick's going to make you more money with this next question than anything else today. Names of people that you've done all the work for these people, if you were to start over, who you believe are going to become massive winners in this next 5-year time frame.
People that are gonna, not people that have been.
People that are gonna. And it's okay if they've done it for you in the past. It's about names of people, not companies, but, 5-year time frame.
Yeah, that's a good question. Neil Adshed, a sort of an acolyte of mine. He worked for me for a while, and because of the White Slave Act and other reasons, I couldn't keep him.
What was the name?
Neil Adshed and his wife, Nikki Adshed. Certainly another former person of mine, Michael Kasawan, I think will go very, very far in this business. Our mutual friend whose name suddenly escapes me, Nolan Watson, I think will go far in this business. The truth is that this second generation, as I call them, they're actually the third generation, the generation below me, your generation, are very, very good. Very, very good. They've come into a market that's delivered them a 5-year bear market, which is the best possible thing. The lessons that you learn in a bear market, if you remember them in a bull market, you're still scared, but the market throws cash at you anyway. The best of all possible circumstances. You haven't learned the bad habits that I learned. There's lots of them, Marin. I mean, sadly, you're closer to them than I. One of the things that happens.
But they don't have to be my generation.
No, I understand perfectly. The trouble is my generation, like Ross Beatty, is extremely willing. But at 67, like myself, he's awful close to his sell-by date. You know, if you believe like I believe that you have to invest across cycles, that's why when I raised money, I would only raise it in 10-year cycles. Yep. I mean, I believe that 10 years is the minimum expectation that you ought to have to make real money in the exploration business. Investing in Ross Beatty for 2.5 or 3 years, or for that matter, investing in Rick Rule for 2.5 or 3 years, is a really, really, really good bet. But you don't make 20 to 1 in 2 years. It doesn't happen. You make 20 to 1 or 30 to 1. You make the money that I now invest by speculating, and you make that money over a long period of time. And it's 40-year-olds that have long periods of time. It's ironic, Marin. Now that I have less time on Earth, I'm more patient. I mean, that's a really shitty deal. But the truth is, I've come to recognize that any expectation, listen, a 10-bagger, a 20-bagger, is a series of yes answers to unanswered questions. If you assume that it requires 5 yes answers, and each yes answer requires 1 or 2 field seasons, the expectation that you're going to get a 20-bagger in less than 5 years is lying to yourself. It can happen by accident, and that's why the 40-year-olds are so important. You have less risk with me. You have less risk with Ross, because we're going to work through a bad situation, but it's going to be tough to expect that you're going to get 6 or 10 more good years out of us.
What about the benefit of having a warrant? Because and listing the warrant, because you know I've done over half, I think, of the listed warrants in the markets, and I don't understand why companies don't do more of this.
I tried to get a personalized license plate in California that said full warrant. What you learn in speculation, you know this, we're talking to the audience, what you learn in speculation is that most of your decisions are failures. The nature of exploration, the nature of technology is that most things don't work. So the ones that do work have to make enough money to amortize the losers and leave room left over for compensation of risk. If you can double your upside with no increase in your downside, the most important thing that segregates you from every other speculator is the warrant. And as we talked about today, Marin, what many people forgets about warrants is never mind the upside in the warrant. Having access to ancillary upside makes you act more rationally with the stock. Many people are afraid to sell stocks that have gone up because they're afraid they're going to go higher. Really stupid, by the way. And if you have a warrant, and so your upside is already partially baked in the cake, you often do more rational things with the position you already have. I notice that I'm past my sell-by date, too.
That's okay. You're allowed to go over it. I've pulled everyone else off, but Rick gets a warrant on his time, too.
You're old enough, you paid rent.
So, Rick, what are your 3... In that room, there's 80 companies, and you're a retail person walking around. At times, it can be overwhelming, and we're doing this because we love it. I don't make a penny being here. I'm away from my family right now. I'm doing this because I love this, doing this for you guys. What are your 3 largest holdings in that room right over there?
Marin, I'm embarrassed to say, or maybe delighted to say, I've been having so many conversations, I didn't go through the room very much. Certainly, AMX Royalty is a large position of mine. They're there.
Cole.
I'm sorry?
Davy Cole's deal.
Yeah, Davy Cole's deal. But I'm embarrassed to say that I don't know who is there and who's not there. Is Mag Silver there?
Yes. Yeah.
Peter McGaw's
okay,
here.
Yeah, Mag's an immodestly large holding. That's a very large holding. Oh, Sprott's there. That's cheating, I guess.
Rick's the only guy who can end up plugging himself in a question like that. You gotta love it. Now, Rick,
well, you asked for my largest holdings, Marion. I mean, maybe as a young guy you were trying to throw me a soft pitch, and I was too old and senile to hit it.
So we heard Grant and Brent talk about 35% of their net worth is in physical gold, and Doug couldn't remember how much gold he has. He just knows he doesn't have any more room for it. How much of your net worth is in actual physical gold, Rick?
Much less. Much less. Less than 5% is in physical gold. And I have no physical silver. For 2 reasons. The most important reason is that a lot of my net worth is involved in Sprott. And if gold itself does well, I'm pitching myself again, Sprott is a very useful brand name for gold. And one would expect both the brand value of Sprott, but also our operating earnings to do extraordinarily well. In fact, a rational commentator would look at my portfolio and say, why on earth do you own any gold? I own it because I'm a coward. I like all forms of insurance. I like a lot of liquidity, and I believe that gold is good liquidity.
Okay, so this question I doubt you've ever been asked, and I mean this with the utmost respect. As you're entering your sunset years,
declining years, yes.
What does Rick Rule's exit? Because I know how hard you work, and at a certain point, you know, you're like the James Brown of the resource sector. You know, you're the first guy. No, he's. You know, it's funny, and I hint this. Who else at Sprott is at the Sprott booth, right?
Oh,
and
right.
Rick Rule's the first guy there, and I met him in 2003, and he stuck around for 40 minutes. And it was when Bonnie, his wife, pulled him aside and said, "We got to go." And he stood there and asked all my questions. Are you going to die at your booth, or does?
It's funny he mentions James Brown. I'm a huge James Brown fan, and being described as Mr. Please Please, I think, is sadly ironic. The truth is that what will take me out of the business will be rigor mortis.
So you don't see Sprott getting bought out by a big bank, and then you're just managing your own money?
I absolutely see Sprott getting bought out by a big bank. We have a wonderful brand name. When the resource sector returns to favor, our AUM will quadruple. Somebody will come and look at us and say, even if resources fail, that AUM is too big to miss. We will be owned by, pick one of the big ones. And I certainly will sell. And I'll take a day or two off, you know. And then
we have a desk for you at Katusa Research.
Yeah, you know, I might take it because what you need when
you know it'll be free.
Yeah, well, I'm glad we had that negotiation.
Oh, don't worry, you'll earn it.
What you need is an old cynical guy as young guys with legs. You need, you know, I'm hoping to be able to surround myself at some time with people like that. What I will tell you is it's interesting also that you described James Brown, who, for those of you who don't know who he was a great dancer. I'm about to go for my second hip replacement, and I can only fantasize about being a good dancer, never mind a great dancer. Beyond that, though, you know, at some point in time, I don't have too many more 2,500-hour years in me. I suspect that you will see in the not too distant future me being much less present than I am today.
You know, I'll tell you my most embarrassing story at my office, and Rick will laugh about this because it's going to bring you back 8 years ago. But when I first met you almost, 16, 17 years ago, you became the guy that I wanted to emulate my career around. Everyone thought it was Doug Casey. And I put up a printout in my office, what have you done today to be better than Rick Rule? And I had a picture of Rick there. And every day I made my guys in my office say it. And we would say, what are we doing better than Rick Rule today? And, you know, 5 years passes. And, you know, sorry, step back. So 3 years after I first meet Rick Rule, he's on national television. I'm all excited. All my friends are watching it. And he goes, you might not remember this, when Victor Adair asked you, you know, Rick, tell us where we are in these markets. And he goes, well, I'll tell you where I'm not. My oldest and dearest friend, Doug Casey, hired this young mathematician who walks around town in cowboy boots and slick black hair and is shooting everything, and he's unblemished with success.
Now, Marin, I have to tell you that putting up something on the wall that says "Do better than Rick Rule" was aiming way too low. Was aiming way too low. You'll remember that my real success in Vancouver had to do with being a corporate pawnbroker. You know, really a lender.
But then Rick and I eventually become partners, and I totally forgot about this thing. And Rick and I are at my desk. We're working on this thing on my spreadsheet, and Rick looks up. And I go, oh, you weren't supposed to see that. That's a bit awkward. And he just laughed and he told me a story. So Rick, I want to thank you more than anything for all the time you've spent educating me, mentoring me. You know, every time I phoned you, you pick up the phone, you've made time. And that's what our industry needs. Guys like Rick Rule who have been blemished with success. And hopefully I've earned that, you know, place with you in your status. So that, ladies and gentlemen, that's contestant number 7.
Thank you.
We're going to be doing a voting. Hold on. And number 8, Timothy Sykes, who Doug Casey had some pleasant words to say. Tim? Did he leave? Timothy Sykes? Going once? Going twice? Is Timothy Sykes in the background? Okay, ladies and gentlemen, let's do a vote. Was it contestant number 1, Brent Cook? Because we're going to bring him up for a final. Contestant number 2, what I mean is put up your hand if you thought who won the dating game. Brent, you can't vote for yourself. Hold on, guys, don't leave. We got free booze coming, and I got a special surprise for everybody. And actually, Brent Cook's paying for it. Contestant number 2, Brent Johnson. Contestant number 3, David Morgan. Contestant number 4, Doug Casey. Contestant number 5, Frank Curzio. Contestant number 5, Grant Williams. 6, Grant Williams. Ooh. Number 7, Rick Rule. Ladies and gentlemen, the winner of the dating game, and it's making me go, Grant Williams.